Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the January 6th, the wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I'm absolutely grateful for your presence here, but much more important than that. And that's that during this next 16 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there too. You can always send me an email, steve@tfnn.com. Please put a radio show question in that subject heading. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. Again, I'm Steve Rhodes, and welcome to the show. Right now, we got a slight mixed bag out here. The only indice trading to the downside is the NDX 100. It's off 0.25% or 31 points. The Dow's up 603. The S&P 50. The Russell 2000, 91 points. 90 points right now, 4.5%. Semis are up 17. Trannies are up 3.25%, 400 points to the upside there. Spot volatility is below its 50-day exponential moving average. That is bullish for the S&P. Gold contract is off 45, but it hasn't broken through a key level of support, the top of its daily profile. We'll go take a look at that. Silver, I believe, is doing the same thing, off 54 cents. Light sweet crude is up nearly $1, trading out at 50.85. Natural gas up nearly 4 pennies at $2.73. And the 30-year Treasury is off full 2 points, almost 2.5 points, 2 and 12/30 seconds, trading out 169.20. Lead the charge dollar-wise, the upside. You got Booking Holdings, $81. AutoZone, 46, nearly 4%. MicroStrategy, almost 10%. Solar Edge, 12%. Tesla up another 5% or $34 out there. To the downside is Amazon, Mercado Libre, the Trade Desk, Shopify, Equinox, all 39.40, 27.18, and 19 points to the downside. So certainly plenty to look at, but I want to look at what you want to look at. And Dean had written in, and he wanted me really just to give an overview of the markets, which I'll do, and looking for possible reversal points in the TLT, the dollar, the S&P, the Qs, gold. Yeah, he covered the entire thing out there. We'll do the best that we can during the show, but let's begin by taking a look at the markets overall. Let's start off by looking at that spot volatility index. So this is a key area to be watching. And there we go, VIX symbol. So what we can see is you're looking at the very bottom left-hand chart, or I'd like you to look at the very bottom left-hand chart, just to begin with. And that blue line out there, which is currently priced at 24.16, that's the 50-day exponential moving average. When the spot volatility is below that, short of identifying a top in the market, it tells you that you want to be long the S&P, or you should anticipate that the S&P is moving sideways to higher out there. Now, when you couple that with being able to take out resistance being the top of a daily profile in the ES Mini, those two combos put together are a recipe for a continued move higher. Well, right now we have the ES Mini trading above the top of its profile, which is 37.48. We're about 20 points above that right now. So it looks like we've got this fresh breakout. It looks like we have a bullish breakout that is going on inside of the S&P 500. Why is that 50-day exponential moving average so important for analyzing the S&P 500, the general markets? Well, the reason is this, and you can do this on your chart. And you should do this on your chart. Top here is the S&P cash indice. The bottom chart is a spot volatility index. And the red line in this case here happens to be the 50-day exponential moving average. And the blue line is a spot volatility index. And so what you see, these little squares, rectangles, are periods of time when the spot volatility index is above or below the 50-day exponential moving average. This way you've got a good general feeling for its message. It is a wonderful tool. If you just took away this one thing from my show, and you use this, just this one thing, you don't need to be any kind of technician, you don't need to understand any of our jargon. Yeah, I guess you need to understand an exponential moving average, but that's fairly easy to do because you're just pulling down a window on your charts out there. If you did just this, you would be ahead of the game. You would already be looking at a chart for the S&P combined with the spot volatility index and be able to make a market call. So that's why that spot volatility index is so important. Of course, our Taz daily profiles, which was the other thing that I had alluded to, are also important. It's not just the daily, it's the daily, the weekly, the monthly, and the quarterly out here. So where are we at right now in the markets? We've got two different messages. What do you mean we have two different messages, Steve-O? Well, the two different messages right now are two messages coming from the ES Mini and the NQ. Now, I know I'm going to confuse the holy heck out of you because I just said, geez, we looked at the spot volatility index, we looked at the TAS market profiles, and everything said that there was a breakout going on. I did say that. However, there's still a top in place inside of the ES Mini. Let me show you that top. That top was generated with the key reversal bar on Monday, and it's a bearish engulfing candle. So let's come out here, and price is not trading above that just yet. That's the candle from just a couple of days ago. It's Wednesday, so it's on Monday. The high there is 37.7325. We're 3.25 points away from that. If price closes above that, what will happen is the ES Mini will negate its Rhodes momentum indicator top, and then it will join the so-called breakout party inside the YM and the RTY, the Russell 2000. But right now, its top is still in place. Even if price gets over it during the day and then closes back below 37.7325, that top will still be in play out here. That's the ES Mini. If we take a look at the NQ, we're going to see a similar setup out here. So in essence, we have two instruments, the S&P or the ES Mini, the NASDAQ 100 by the NQ, both of which have confirming topping patterns that are still in play. Price has not been able to bust out support, but the top is also in place. So really, when we then just boil things down and we take a look at the patterns and we put that together, we don't just trade just only off of the spot volatility index and only off the TAS market profiles, but those help us to understand where buyers and sellers exist. They also help us to understand, in the case of the spot volatility index, the tendency for how the S&P 500 will behave. But right now, the ES Mini and the NQ both have topping patterns. As far as the Dow, well, the Dow is trading above, and the Russell 2000 trading above their Rhodes momentum indicator signals. That doesn't mean that another one can't form, because we can see prices moving higher, doing less relative energy inside the Dow, but that's going to require another bearish reversal candle to confirm that topping signal. So what do we have right now? We've got the Dow that is bullish for sure, and the Russell 2000, but we don't have that same message from the ES and the NQ. They're not making it easy on us, but we'll be right back.
If you're not currently using the Taz Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Taz Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome out, folks. Welcome back. Welcome out. I don't know what welcome out means, but welcome back for sure. So we were taking a look at in that prior segment, taking a look at the divergence, so to speak, between the S&P, the ES Mini, and the NQ versus the Dow and the Russell 2000. So let's go take a look at the Dow a little bit further. That's the chart that's up on our screen. Now here we take a look at the Dow priced in both dollars, yen. Well, I say both, but we've got more than two. But we have the Dow here priced in euros, yen, pounds, and US dollars. What we can see is that there was a peak that was formed in January of 2020. Those highs still have not been taken out for the Dow priced in euros, yen, and pounds. In terms of pounds, it is trying to take out that level. That level would be a close above 22,803. Priced in pounds, we're at 22,774. The Dow priced in yen and the Dow priced in euros has got a fairly decent way to go before that will generate a breakout message. This type of divergence always has us on guard. The proof of that is going back and take a look at what took place at the 2007 top. Again, here we had a divergence. We had the Dow breaking above the 2000 highs priced in dollars and in yen. But it was not doing that in euros and pounds. In a bull market, you have a breakout in all currencies. We can get there, it can get there, but it's not there just yet. And so there is a divergence to be paying attention to and to worry about. Is there anything inside the Russell 2000 that we have to worry about out here? And technically speaking, let me see if I can find, technically speaking, I believe the answer is no. That being said, let's still go take a look at the Russell 2000. I think I've got four charts out here. So what we can see is there is an A to B equals CD pattern that's underway. This is one of the things that Dean had asked about. And we're looking at the weekly time frame chart. And the Russell 2000 has made its 1 to 1.272 A to B equals CD price projection. 2064 is the number. We're trading at 2070, so we're in that range. If price continues to move higher, that move higher is suggesting a target of 2268, the 1 to 1.618 A to B equals CD. On the very bottom right-hand panel, that is the quarterly time frame. What you and I did was we took the swing points, the major swing points, the high in 2018 and the low in 2020. And then what we did was your Fibonacci expansion of those two swing points. Price last month made its way to the 1977 level. That was the 1.272 expansion of that area. Now price is above that, and this is suggesting to move to 2259. So if we summarize the Russell 2000, I want to, let's do this too, RTY. So to summarize this, based upon these charts that you and I are looking at, price wants to move higher. And that move higher is in the 2259 to 2268 range. Is there anything that could get in the way? Well, of course, something could get in the way, but until it does, we just have to wait for it. While we're waiting, what is the message of the market? When we take a look at the Russell 2000 equity future contract out here, we'll see that it took out its TD9 count. That TD9 count worked, pushed price right back to support. That was the bottom of its bullish structured profile. That held, and now it's off to the races. Price still stretched out here, but we need to see another bearish reversal candle to confirm that. On a weekly basis out here, do we have any kind of a topping signal or pattern? We do not. Whereas on a weekly basis, we have TD9 counts in the ES, the YM, and the NQ. We don't have that same pattern inside the Russell 2000. If I take a look at a 30-minute time frame chart, this is to get a feel for some kind of short-term time frame signal, if there is one, and there is not as we speak. Now, when I say there is not, there is wave number 7, so it's the potential for wave number 7, but you have to have a lower high by 1:30. It's in bar number 7 of a TD9 count, so that says you could be about an hour and a half away, so that would take us into 1:30 to about the 3 o'clock time frame between 2 and 3, where you could potentially in the Russell 2000 see it start to run out of gas out there. That doesn't mean that it's a ultimate top or anything like that. Just simply run out of gas after this nice run that is had today. So that's a review of the equity markets. Let's take a look at the semiconductor index. Is one of the few indices that did not have a topping signal out here, and let's go see what SOX. Let's go see what it is doing here: daily, weekly, monthly, yearly. Oh, I take that back. So the SOX. Okay, so the SOX very much like the NQ and the ES Mini. What is that? Well, this generated a Rhodes Momentum Indicator top 2 days ago on Monday when it generated that bearish engulfing key reversal session. In order for the SOX, the semiconductors, to break out, they need to close above 2872.20. So it still has its topping pattern in play for the daily time frame. The weekly time frame does not have a topping signal. It is in bar number 6 of a TD9 count. This week and last week have been nothing more than a test of support. What support, Steve-O? The oscillator and change line. That's that green line out there. That's the line you definitely want to know. This is your friend, not your foe. This line was developed to answer the question, when is a retracement just a retracement back to support? It is not a moving average. You can try to supplement it with a moving average, but then you could get your arse handed to you, and I don't want you to do that. Instead, just use the actual tool. If you'd like to learn this tool, subscribe to Mastering Probability. I lay that out for you, and it's a wonderful tool. You can see it in work, right? You can see it at work right now. On a monthly basis, we take a look at the semiconductor index. What do we have out here? Well, we are on a monthly basis as a month of January in bar number 9 of a TD9 count. We do know that bar 9 or the bar following 9 can, not always, but can identify the top or bottom. In this case here, we're talking about a top end. Price is stretched, so it's got the Rhodes Momentum Indicator signals out there, but price needs to close below its oscillator and change line to really signal that there would be some kind of top in place. That's currently at 24.27 on the monthly time frame chart. So the semis, again, they will need to close above Monday's high. If I didn't give you that number, it's 2872.20 out there. And so right now they, along with the ES and along with the NQ, still have active topping signals. So it's not as if everybody has sent in their RSVP to today's rally. Okay, what do we want to take a look at next? Well, gold would be a good idea. So let's go do that. Now, in the case of Goldilocks, I'll show you the Gartley sell pattern. Those of you that are just learning this pattern out here, great tool, great pattern. And the Gartley pattern is an A to B equals CD pattern, a counter trend move of a prior move. There, boy, that actually confused me. So, geez, it must really have confused you. Let's look at it visually. It's a little bit easier to look at visually. So what did Stevie mean by that? Well, if you take a look at gold from back in August, it's been kind of a straight line move down into the early part of December. That is your move. The counter trend move, or the Gartley cell, says an A to B equals CD in the opposite direction of that trend, therefore a counter trend. Well, as we take a look at the gold contract, this has formed a 1 to 1.272 A to B equals CD. I'll go ahead and draw that in so you'll see that out there. I've just used my tool that shades in the Gartley cell signal so you can see the nice 1 to 1.272 A to B equals CD pattern out there. Let's go ahead and get rid of that and just leave the nice shaded levels out here. Now, here's what gold contract has done and what it hasn't done. You can see Stevie's green line, again, that oscillator and change line at 1897. Cool tool, folks. It recently changed colors. And what we know is price will catch up. Price and that line will catch up to each other. It is the test of that line that will tell you the intent of gold. A close below it says lower price and move back to the bottom of that profile. A test and rejection, we're in a neutral to bullish mode for gold. Steve Rhodes with TFNN. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at gold before we went to that breakout there, and we were looking at how we looking at the Gartley cell pattern. We were also looking at prices coming back to its oscillator and change line. And I'd say at this stage of the game being 1:30 in the afternoon, it looks to me like that support level will hold. And why would Stevie say that? I would say that because in taking a look at the U.S. dollar index, which earlier this morning was showing us a bullish reversal candle. As we speak right now, that's not the case. The bottom of its daily profile is rejected price. The oscillator and change line, which is red, that means we have a falling price oscillator below zero, has rejected that level. And so we don't have any kind of a bottoming signal here inside the U.S. dollar index. If we do get that at the end of the day, well, then that could be a different story out there, because that would suggest a move higher in the U.S. dollar, which could or should put a little bit of pressure in Goldilocks. But at this stage here, the dollar has failed to confirm that bottoming pattern out there. And so I believe that was also one of the other areas that Dennis was interested in. Let's go take another question out here. This one from Hector and the fuel injector. That would be Patty. And Hector says, happy Wacky Wednesday. It is a Wacky Wednesday. How is it that the Russell 2000 is up nearly 100 points, 5%, in the face of just small businesses getting shylacked out there? Very, very interesting. Wasn't Schultz that said that, right? That was Artie Johnson. Yep. But that doesn't matter. And happy Wacky Wednesday back to you guys. Can you please identify, if possible, A to B equals CD ups are on ENB on a daily basis out there? And also, is today's move on the XLF a head fake? Let's go take a look at the other one. Was more of a private message out there. So let's go take a look at first ENB. ENB is Enbridge out here. So you're looking for an A to B equals CD. Now, you didn't say in which direction, but let me make sure about this. Yeah, you said an A to B equals CD up on ENB on the daily basis. So as I take a look at this chart out here, Hector, if I were to see an A to B, and maybe this is what you're referring to, if we were to draw it in out here, the potential of an A to B equals CD pattern, I assume your A point would be the low from October 29th. And your B point would be the high from, well, it's either the high of, I got to just figure out which one is the real high. Is it the trading session of 12/14 at 34.29 or 2 days prior at 34.28? No, it's the 34.29. That would become our B point. And then the C point would be the retracement down into the low on December 21st. So is that the A to B equals CD pattern, Hector, that you guys are taking a look at? Now, Hector can't answer that, but we're going to go ahead and answer for him, and the answer is yes, that's what he's looking at. The problem is neither you nor I can make that determination yet because price has not taken out the B point. We could very much, oh my goodness, we could also identify an A to B equals CD to the downside out here. We can't confirm that either. The A to B equals CD to the downside could look like this. The A point out here being the high from that October that we used before for a B point, December 14th. Your B point being the low on December 21st. And your C point could, in fact, be today's high. So there could be an A to B equals CD to the downside. I can no more call that the A to B equals CD pattern is in play as opposed to the A to B equals CD to the upside in play. And that is because the swing points that we would use, the markers, the B point, has not been taken out to either side out there. So I hope that that helps you out. I don't know that it does, but that's the answer to the A to B equals CD pattern out there. What we're going to do, because we have call ahead seating at this restaurant. By the way, today we served up salad, chicken salad. Not chicken salad, but a chicken with a salad. Grilled chicken on a salad. I'll eventually get it. But before I continue to chop up the English language out here, let's go to our caller, and then we'll come back to Hector's questions with regard to the XLF. So let's go out to the UK and speak with Mozam. Mozam, thanks for calling. Thanks for holding. How are you today?
Happy New Year, Steve. I'm very fine. How are you?
Good. I'm doing well, and Happy New Year to you as well. And we want to look at, you want to look at ticker symbol LSE, is that correct?
No, actually what I want to look at is the Rio Tinto, but I'm not sure whether you have the data for the London Stock Exchange listed one.
I don't have it for the London Stock Exchange, but I can take a look at it on the U.S. Stock Exchange out there. Would that help you?
Sure, it will. It will.
Okay. So what are you doing with this instrument, and what are you looking for?
Actually, I do have a small position in this, but on the London Stock Exchange listed one. And I was looking at the historical data on the platform, and it's very close to the all-time new highs, but not. It doesn't seem to be doing the same. It's from in the U.S. version. So I was just trying to get some idea. What did you see on the charts?
Yeah. So in the U.S. version out here, and I'm looking at a monthly time frame chart, so we're just early into the month. But as we speak right now out here, prices above resistance, and that resistance would have been 76.67. That was a prior swing point, and that was the swing point from the month of February 2011. So clearing that 76.67 level, Mozam, would suggest that price is on its way back to its all-time highs. Now, on the U.S. exchange out here, we've got that printing out at 139.66, and currently it's trading at 83.29. There's also an A to B equals CD pattern that we can draw in here. So since Hector had asked about the A to B equals CD pattern, the A point would be the low in January of 2016. The B point out here would be the high in July of 2019. See if it can actually get this. And the C point would be the low in, I'm assuming it's March. Yeah, March of 2020. So this has made the one-to-one A to B equals CD already. That says that this is going to go to its next target, or should go to its next target level. The next target level is the 1.272 expansion of that. That takes you to 88.95. Now, in this instance, we're taking a look at a monthly time frame chart. And this is really the importance, one of the important aspects of the A to B equals CD pattern. And that is that you maintain the exact angle of the A to B point, and you maintain that angle of that line for the C point thereafter. And the reason that you do that, there's a number of reasons, but one of the reasons that you do that is to understand the move off of the C point. Because about 60% of the time, you're going to have an A to B equals CD pattern that completes at the one-to-one level. Wouldn't you like to know if there's odds that favor that this is going to be more than a one-to-one level? Well, in this case here, we saw about a 0.618 retracement into that C point, 68%. So that's kind of normal. That would not have been an indication that this was going to make a larger move above that one-to-one area. However, because we maintain that same angle, we can take a look at how prices come off of that C point. We can see it's an explosive move. It is on the strong side of the C to D move out there. The right side would be the weak side. The left side is the strong side. This is telling you on a monthly basis that Rio Tinto has a big, strong move that is underway right now, as I see it. Now, this is, using the U.S. exchange out here. What else can I provide to you for Rio Tinto? That was the longer-term play out there. And what else can I provide you in Rio Tinto?
No, that's perfect, because I'm looking at the longer term. I'm happy to hold it for a month and months. That's fine.
I didn't say I would get there in a month, but it is on its way higher. Do me a favor, Jose. Please hold on through this breakout here. We'll be back in just a few minutes. This is Steve Rhodes with TFNN. We'll be back in just a few.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 or quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 590, S&P 53 points. We're on the line with Mozam in the UK. We just took a look at Rio Tinto. Ticker symbol there is RIO. I believe you also want to take at Royal Dutch Petroleum out there, Shell.
That's right, Royal Dutch Shell Petroleum, yes.
Yeah, and I can't pull that. Symbol up. I think the RDSB is going to be on your exchange out there, and that symbol doesn't carry over for some reason. At least on my system.
If you try RDS.B, you might be able to get the idea.
You're the man. You are the man out there. Okay. So tell me what you're doing here and how I can assist you.
So a few days ago, I closed my position in it.
Okay.
But it looks like a very nice breakout from this area. So I'm looking to get back in this one. So I just wanted to get some thoughts if you think this is like a valid breakout.
Got it. Okay. So I can't pull it up on my other charts, unfortunately. So we'll just simply go with my black background charts and just simply go from there. So the very first thing that we notice in today's price action is that, and this is the daily time, I'm sorry, this is the weekly time frame chart that we're looking at. So I'll go back and we'll take a look at the daily. But on the weekly basis, what you have going on potentially is a breakout. Now, when I say a breakout, price is right now trading above the top of its bearish structured weekly profile. That's at 37.12. I realize price is inside a gap that was formed the week of March the 9th out there. But trading above that resistance level is a strong message and tells us it's really a second signal of a change in trend to the upside. So the question is this an A to B equals CD to the upside out here? If I were to draw in that pattern, the one that I would look at would be using that hammer candle low from October 26th. Again, it's a weekly chart we're looking at. I would use the high from December 7th and then use the low from December 21st out here. The volume, by the way, of that B point was about 13 million shares. And so far, we've done 14 million shares this week alone. So this is what we would call a confirmed A to B equals CD to the upside on the weekly time frame, and that gives you a price projection of 48.39. Remember, when we were taking a look at the A to B equals CD patterns, when I was reviewing that for Hector and Patty out there, I had indicated there are a couple of tools with regard to the A to B equals CD pattern that really help us to understand what the intent is. Is it just a one-to-one A to B equals CD, or is it going to be more than that? In this instance here, because the retracement was only a 27% retracement, it's a very strong explosive move to the upside. And odds favor that this will be more than a one-to-one level. We need more weeks to pass in order to truly confirm that. But with regard to the start right now, the answer is, yeah, it looks like it wants to move higher. higher. Now, your question is, where is a good re-entry point out here? And if I look at the daily time frame, I know that was a question, but here we can also see that price has taken out a trend line on the daily basis. Yesterday was a close above the top of its daily profile. That was a nice bullish move out there. Let's look at the monthly time frame. It's just a retracement of a huge move that was to the downside. And here, but it looks like there was a completed A to B equals CD pattern. And that pattern was confirmed and completed right here in November of 2020. So that pattern typically says, all right, we could take a look at a retracement of the entire pattern. I'm not going to do that. I'm going to take the more conservative approach. The more conservative approach is just simply, in essence, what would be the C to D leg. And on the C to D leg, the first move should at least be a counter trend rally, which would take you up to 41.27 or 38.97. Now, everything else that we looked at here on the weekly time frame, right now we've got the monthly view out here, is suggesting it's an explosive move and a move to the upside. So more likely than not, over time, where Royal Dutch Shell is headed to is probably the 0.618 retracement, and that's at the 54.91 level. So your question, again, was, hey, where is an entry point? Now, I'm going to put this to a 30-minute time frame out here. And on the 30-minute time frame, we're just trying to see, is there some kind of bottoming signal? There's not anything just yet. If price were to pull back to 38.22, that would be one potential entry point out here. But I really have to get the tools on my other software going to give us I think, a better visual as to where there might be some type of entry point. I think what you do out here, short of, because you were in it and you exited, and I'd say try to be a little bit patient, but look for a 30-minute time frame chart and some type of a pullback out there, maybe some type of a pattern to get you back into this equity. Does that help?
Perfect. That's great. We'll do that. Okay. Excellent.
Perfect.
Thank you very much, Steve.
You bet. Thanks so much for calling. Have a great day, a great evening, I guess, right now over in the UK. So let's go back to Hector's other question, which was about the XLF. And then the XLF, he was asking us to try to identify an A to B equals CD to the upside. So the question is, can we do that out here? And I believe Hector actually asked about the XLF yesterday. And when we looked at let's do this. Let's not guess at anything. Let me put up the XLF. And because I want to go back and revisit that anyway. And I would have done it anyways, no matter what, because of new information that was presented to myself by myself. Now, yesterday, in looking at the yearly chart for the XLF, what we noticed was that bar number 9 of a TD9 count on an annual basis is a key reversal bar. So not until price closes over that high inside the XLF will price will there be like a confirmed breakout to the upside, or this pattern. Actually, this pattern won't even have failed, right? Because the top can come on the bar following bar number 9 out there. But it's got that potential that says, hey, caution Will Robinson or Steve Rhodes or Hector and Patty. When we looked at the monthly time frame chart, the monthly was the only time frame where we didn't have a topping signal. But that truly wasn't the case either, right? Because we do have a topping signal. It was the Rhodes Momentum Indicator top from March. And until that high gets taken out, that resistance still needs to be paid attention to. So guess what? The monthly also has a topping pattern that is still in play. The weekly, when we took a look at the weekly time frame chart, we said, hey, guess what? We are in week number 9 as we come up to the prior highs out here. And so that says caution. So the yearly, the monthly, the weekly say caution from a pattern standpoint. And the daily chart, we take a look at it. What do we have out here? Well, we got Zippo, nada. Today, price is taking out any kind of topping signal because there was wave number 7. There was a Rhodes Momentum Indicator signal. But today's price action, Hector, has taken that out. Now, you asked me to come back and take a look at an A to B equals CD pattern. And we're going to do that. But I'm going to make you wait for that. What do you mean you're going to make me wait for that, Steve-O? Well, it was when I was doing this chart for subscribers earlier, which I was taking a look at the S&P 500. Remember, just on folks, this is a non-technical analysis, but an excellent way to take it, especially in the beginning of the year, at any point in time, a way to understand what price action is communicating to us. If a instrument is going to be breaking out, it trades above and closes above the prior year's close at a minimum and or the prior year's high. Well, guess what? The XLF is trading above both of those. So it's bullish, but it has those patterns in place right now that say caution, but not on the daily time frame. Now when we get back to this breakout here, we'll go see if we can figure out where that A to B equals CD pattern on the upside is that technical was asking. We'll be right back.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at A to B equals CD pattern on the upside inside the XLF for Hector and Patty. And this question was really, is today's move a head fake? Not so much a head fake, but we do have that A to B equals CD pattern inside the XLF that should target the 3182 area. That's the one-to-one A to B equals CD price projection. That gets you back to the 2020 high from February out there, and that high is at 31.38. So is it a head fake? No. What will happen as price gets back to those prior highs? I don't have the answer to that. Hector, thanks so much for writing in. We're going to finish the show by answering a question for Gary V. Gary says he's looking for an entry point into SLV. He knows he's late to the party, wants to know where there's a good entry point. So I'll just look at the SLV chart for you. And then take a look at the SLV chart. That would say that as price got down to 2471-ish earlier this morning, And the actual low on the SLV has been 24.72. Oh, how about that? 24.72, and the oscillator and change line is 24.72. If you're thinking long, then that was really your entry point. The reason is that price is trading above the top of its daily profile. And so therefore there we use that oscillator and change line, Gary, to help us identify an entry point. Now, silver itself, let me pull over the silver contract, because the silver contract is going to have different patterns than the SLV does. And the reason is because of trading hours out here. So when we pull over silver, before you could even consider entering a long position in SLV, you have to take a look at the silver contract. And the silver contract has two Gartley sell signals that are in place out here. You can see that silver got down to test its oscillator and change line at 26.66. But because you're late in the game, I want, therefore, silver to negate the sell patterns, the silver contract, before you would take an entry position into SLV. And we just don't have it, and that's because right now the neutral is signal overall. Folks, thanks so much for being here. Stay tuned for 2 more great hours, and I'll be back with you on Thirsty Thursday, but have a wonderful Wednesday. Take care and be safe.